Hello friends, once again I welcome you back to the channel. Today we are going to be talking about boom and crash, and we're using crash 500 to illustrate how we can refine supply and demand zones. So that's what you're going to do. When it comes to refining, let me quickly talk about it. When it comes to refining, it could mean a lot of things, but most of the cases we could mean talking about how we can go from big time frames and then we up to small time frames, just basically to understand the order flow, or marking out certain zones on big time frames, and then we go to small time frames, and then we see whether we can get shifts in market structure or continuation patterns in those areas for us to utilize them as points of taking entries. So basically that's what we're going to be talking about. So that's and then maybe the other thing that I can talk about why I picked crash 500 is that a little while ago, I think it's been like maybe 2 months, I made a video on crash 500, and then that time I expressed my concerns because it was a little bit late, but I remember doing a video, and then we were in this region about here, you get, and then my prediction was that we're going to leave this region, you get. These regions, the bias was that this was our TP1, this was our TP2, we've reached the area, and then basically we're going to be seeing when we reach those zones, you get, when we reach those zones, what do we do, what comes next, you get. But if I can quickly answer that, we'll look for shifts in market structure. So if you learn how to mark out supply and demand zones, they could help us to understand the market a little bit more, you get. So and maybe the other thing is that in that video I tried to reference the situations that were happening on crash 500 to crash 1000, because even here I'd ever shared a signal where this was our TP1, this area here, this level here, you get, where it was our TP1, and then this was our TP2, you get, and then those areas we hit them, you get. But why is it that we can have two targets? It's because in those regions there are possibilities of the market reaching there and then it continues down. So if we can go back just a little bit in history, we can see that crash 500, actually if you go on even the weekly time frame and all that, crash 500 for the most part of it, it's been selling. It doesn't mean that for those that were buying have never gotten opportunities to trade. No, there are those moments when we see that the market trends down, and then we got, most of the time in price action we call it a complex pullback, whereby we get a significant pullback that even has structures in it, you get. But all those marks are always left behind, because we always base on what has happened in history to see or predict what comes next in future. So that's it. So now when we can see, if we can analyze here, even these highs that we are looking at, they were highs that were in a downward trend. It doesn't mean that in this region it was so much a big uptrend. We can see that generally crash 500 was selling, but all of a sudden we get these significant highs that are even acting as some of our possible targets, you get, as our possible targets. So when we are to analyze just basically the area, let me first delete this trend line. So basically we are going to be looking at this area, and these are common things that we are going to find in trading. You find that the market is moving in a given trend, you get. So this was a downward trend, you get. So there are those moments when we anticipate that the market may make some significant pullbacks, much as even overall our bias is that we shall first get our confirmations, strong confirmations to sell, but still this one remains a target. Like overall I believe crash 500 has to come back down, and it continues with the downward trend. But then that time I was making this video because I was anticipating that it would pull back significantly, you get, the same way it acted in these regions where, yeah, these regions where it moved up, and then even here it moved up significantly. So it's the same thing that we anticipated here. Could it proceed back upwards and it buys forever? Yes, it can, you get. But then how can we mitigate the chances of us losing? It's us zoning out our market, but then you need to be careful with the things that you look at. So let me at least now we've seen that we're in a downward trend. But then what intrigued me to make that video is that I analyzed this area here, you get. So all of a sudden we get another block. I don't want to get back in history into the details of what I talked about already. I talked about so much about other blocks, and even in that video I explained everything here. So you could refine this one to get on small time frames, and then you get in. But basically there are those marks in the market that are left behind. We can see that this is a downward trend, but this is a consolidation. There are those consolidated moves, but then we have, what intrigued me was this large imbalance, you get. So this is a very significant mark that we have. Not all imbalances get filled away right away, but always when we see imbalances, we get hints that the market could be reversing back to rebalance that area. For instance, we can see that in this region here still we have an imbalance that is not filled up. Actually, that's why we see that we have another possible second target. Why? It's because when we reach here, it is possible that we shall continue with the downward trend, much as it was for a moment. Even at that time, we got, for those that are used to my strategy, now my students, they know that on M15 during these days here, about 2 days, concrete days, we had opportunities for us to sell, and even there's another day here we had an opportunity to sell, and then we continue with the trend, you get. So basically we are going to find that when we zone out our markets, you get, on big time frames, when you go to small time frames, you're going to find numerous opportunities. Like those days when you find that you can buy, and then you find that there are those days when you can sell, you get. So it's going to be really key. So the first opportunity that we observed was that as we got the imbalance at the break of this structure here, one of the things that would run to our minds is that we would expect mitigation. It doesn't come always right away, you get. It doesn't always come right away, but it's something that we anticipate. Just like in business, there are those moments when you anticipate certain periods of the year, you get. So when we go to H4, as the market started to go sideways, we would say that maybe it has started to lose momentum. What do we prepare for? Our anticipation now is geared towards going back to fill up the imbalance here. You get the imbalance here. But remember, I've told you, this is not the only imbalance that we have. We already have another imbalance here. So now this one becomes our target 1, and then this one becomes our target 2. We have another target. Right now we are in, this is not a dilemma, but we are at a point where we could proceed here or we could come down. Overall, the major confirmations by the way that I've been seeing today is confirmations of coming down, much as I still have a target to first reach up here, you get. But then I'm looking at the confirmations for me to get in on big sales, you get. So that's those are the opportunities that we look at. Yes, there are quite a number of confirmations that I'm not going to address in this video that I use, but then this could be important information to you. So now what we are going to do is we are going to be looking mostly at this region just over here, like this, you get. Basically this one, let me change the color a little bit. So what I was saying, this is the major region that we are going to be looking at, you get. Not so much about what is happening currently, but then we are going to look at the opportunities that are provided that time. So when we see this, we start dropping on H4, and then we are going to see that this is what we saw on H4, you get. I told you on the daily we started losing momentum. The market started to move sideways. So each time the market moves sideways, it is communicating to us something, you get. Either that we are going to proceed down or we are going to proceed up, you get. We are going to proceed up. So basically that we can see that on H4 we went above some significant, these highs here. The market moved and closed above, you get. So the market moving and closing above, you get, on H4. Personally, this was one of the major confirmations that the market was going to proceed to buy or to fill up the mitigation, because we have a target to hit. It is to mitigate the market, to fill up the imbalance, you get. So now the market reversing, we all know that the market moves as it makes pullbacks, you get. It doesn't shoot up like an aeroplane or a stone, you get, it moves in cycles, you get, it creates fear and then it moves, it creates fear and then it moves, you get. So people, you get lost in when to get in or to get out. It's an upward trend, but then you see the market trying to come down, so you sell, then they come up and then they take your orders, you get. So that's it. So if at all we went up and closed above, we anticipate that the market would be reversing. So for the market reversing, we would look at the order blocks or the manipulated area where that happened before the movement that caused the closure of the market above. It was this region here. So as the market tapped into this area here, I can call it an area of demand on H4, you get. So if at all I can just look at this one, let me quickly at least let me highlight this area, and then we are going to go on a small time frame, and then we see by what it means to refine, you get, what it means to refine, how we are going to be spotting the opportunities. So we can see that it's this area. Let me get a much proper color for us to differentiate it, you get. So let's go with that one, the light pink. So this is the area we are going to drop on H1 M15. And by the way, for me, my strategy, I always say that it's based off the daily and M15, but then you can see how we are traveling through H4, H1, and then we get our entry points on M15 and below, you get. So basically this is the area down here. So the next thing that we do is that I do is to go on a much smaller time frame, because we've highlighted this area when this point, we were at this point up, you get, we closed up, but then the market is reversing down. So if I told you we're taking selling entries, these areas here, this region here would be your TP region. Why? It's because we expect that when the market reaches here, we expect it to buy, you get. It's moving from a supply area to an area of demand. Now this is the area of demand. Then you can see that on H1 we are seeing some signs, you get. But then let's go to M30. Now the problem is that sometimes we have to go back on H4 because it's a region very hard to see. Yes, this is the point that we're looking for. We go to H1 and then look for it. We go to M30. Yes, it is there. And then we go to M15 is just taking it away. Let me quickly look for it. Actually, now maybe it could be even the only area for as long as I explain it well, and then possibly you pick it. I believe we may not need to go through the rest so much. So let me go to M30 and then let's pray hard this. Yes. So now when we come to M15, I always tell my students that each day there is an opportunity for us to get a clear move for as long as we've done proper analysis. So for me, when I reach here, I turn on the period separators. Now these period separators, they're showing us whatever is happening. This was the day that happened. Each period separator is showing us a day. From here to here, it's a day. 24 hours, just like that. So we can see that we got a clear day of sell. You get a clear day of sell, and then you're going to find that market behavior, you're going to find that most of the time when you are going to end a trend, the market moves aggressively, you get. So this way, there are those marks. It's not that always when the market is moving aggressively the trend is ending, but then you're going to find that on a given time frame, most of the time it moves aggressively out of a consolidation, you get. So we can see that we had a clear day of sell. Then this day moves, we got a shift in market structure. This is the area that I've highlighted on H4, you get, on H4. Remember, it's a demand zone on H4, but then let's look at M15, what is happening. We can see that we got a shift in market structure, you get. We get a shift in market structure. Let me use an R, you get. We get a shift in market structure. So we come, we trade through it, you get, we trade through it, and then the market proceeds up. So you see that this was the opportunity, you get. We would have gotten it on M15. You get in immediately. Actually, when the market pulls back, this was the area of us the area of us the area of us to buy, you get. So here you would get in. So if at all you had gotten in at this point here, you get, at this point here, you wouldn't even mind, because now this was the most perfect area for us to get in, but after zoning it out on the daily, you get. So then if you want to hold your trades, actually let me quickly talk about that. If you want to hold your trades, given that you've gotten the perfect spot on M15, this is the first opportunity that you've gotten. Then on the daily time frame, let me turn off the period separators. On the daily time frame, what would be your target? You got in here. This is the region. Let me show you. You get in here. This is the point that we've highlighted. But then, what is the target on the daily? What is the target on the daily? The target on the daily is here. You can find that here the market moved up, we get pullbacks down, but then they're not taking out this point here, you get. They just come and end into that point, and then we move back up. The market tries to come down, but then we move back up, you get. So that's the point, that's the main point of us. That's the advantage of us refining these entries. Why? We get the perfect sweet spots for us to get in, and then we can hold the trades for long. Now there are those people we know that why does the market move up and down? We can see that overall the market is moving up, but then we can see that we have some bearish candles. So basically, if you've refined, your bias is to buy, you get. But then you're gonna find that when you go on, let's say H1, when you do proper analysis, there are those moments when you can take advantage of these selling entries. You sell and then you buy, you get. Let's go on M15. You can, here I turn on the period separators, you can buy, and then depending on certain confirmations you sell, you get. So I don't want to make this video so long. There are quite a number of confirmations. Most of them I've talked about in this video, on this channel, such as order blocks. Actually, when you zone out your charts on a big time frame, and then you're on small time frames, that you can be on M15 and then you get another block, a selling order block, you get. So you can utilize that, okay. So you can utilize that, and then you take advantage of it, and then you do what you would sell, you get. So currently this is where we are. This is H4. This is where we are. When we reach these areas here, we get hesitant to take entries, you get. We get hesitant, or we become cautious. For instance, here, if we're on H4 in this region here, it would be much easier for you to take an entry, because you are on the way to reaching a certain supply area, you get. But then in this region, where those points where we expect the market to be shifting, always be careful. So which means that those moments when you have to watch the market and study it, just like the way I'm doing currently, because we are in a critical area where I'm expecting it is possible that we could come and then we proceed with our downward trend, or moving to this area just back up, you get. So but basically you drop on small time frames the way I've illustrated, and then you look for shifts in market structure, you get. If you don't get a shift in market structure, then you don't take entries. Now, what are the shifts in market structure? You watch my videos on you watch my video on order blocks, it will help you. Or you can watch my video on change of character and RTO, it is going to help you. Those are some of the confirmations. There are quite many, but those are some. So if for those that have been following my videos, I believe when I talk about such, you're going to understand, you get. So basically that's it. But then if you do proper analysis, you're good to go. You're really good to go. Just like maybe I may do another video on Crash 1000. This is Crash 1000. Why this is my target. it could take long, by the way, because we're on the daily time frame. I did a video on VIX 75. You get, I did a video on VIX 75. By the way, I'm expecting it to continue dropping. You get, I think we're in these regions, we're around here. The last time I did a video on VIX 75, you get, for price action. And then yes, we were expecting a pullback. I told people to hold, not until we get confirmations to sell. I haven't been updating you on VIX 75, but for my students, I gave them, we analyzed it, and then we've been proceeding down, because yes, much as we're about to reach our first target is about to be reached. Actually, for today, it's about to be reached because it was just below this. You get, so actually for now, VIX 75, it's better to watch what comes next. But then if this target has been hit and then we don't get shifts in market structure, this is our next target. This, I'm going to run an analysis, but then this could be another target for me to eye out. You get, so basically you can do anything with price action. You can do anything, but then let me quickly talk, do some advice before I close off the video. I found out that many people most of the people watching my videos, they're new to trading. It's a good thing. The little advice that I can give to those people is that take in enough information and then practice a lot. I found that there are some of you have the knowledge actually, but what is lacking is really practice. So practice a lot and then learn a lot, then you can go on the real accounts, because these markets are no joke. You get, these markets are no joke. You can look for the information from wherever you can. And then someone was also asking me why I'm charging mentorship. Truly, I am charging for mentorship just because I dedicate a lot of time to my students. But then it's not mandatory. Actually, I'm very, very okay with you people looking for information wherever you can get it. You get, what matters most is for me, actually for me, I wish everyone to be a winner. Whoever is watching my videos to be a winner, no matter where you've gotten the information. So but it's always good for you to look for information, be it from me or someone else. I'm very, very okay with that. You get, but for now, I wish you the best.